In this video, I want to break down how you can always determine the bias. I've just used this strategy and made 700 bucks today, and I want to tell you how you can do it. So, this strategy is called the break of an order block. And the principle behind this is if we have an order block and it's illogical for this order block to be broken, we can determine the bias by, okay, we break this order block, we want to pursue liquidity that's further below. And I'll show you how I use this to determine the bias of my trade today. So what we have right here is a bullish bank block. Okay, now there is no reason for us to sweep this low unless we want to continue further bearishly. And the reason for that is we have swept this low here, which is the 930 lows, and we get a bank block from it, which is basically a break of intermediate term high, then a sweep below. So in this entire move, banks catch liquidity. And what happens? Well, at the New York Open, we get this huge break of a bank block. And once we get this bank block, this is how you determine the bias. Now you know, okay, we just broke this low that we didn't have to break, so we want to pursue liquidity that is lower. First case, this one, okay? Now, we didn't get that. Let's drop down to 1 minute. Instead, we got beautifully a move below. That's the break of a bank block. Once we go below there, and then where do we go up? We sweep this very clearly engineered triple top, right? Everyone in retail have their stops above here. They went short, they went short there. Again, stops above there. So where do we have to go before the real move can begin? Gotta go up, sweep their stops. Now this is where the shads enter. This is where the pros. This is the slightly more risky entry to take it like this. With the logic being our bias is bearish. This is the liquidity we want to sweep before we continue. There is no reason for us to break this high because this is the bank block. So this is where the pros enter after that sweep. I entered, I waited for a lower time frame order block. Now, mind, if you know the bias, you can use any strategy. This is just how I entered. I waited for I dropped down to the 15-second time frame and I waited for a order block to happen with inducement. Do we get that? Yes. Shape, break down below, sweep the highs where people would put their stops, right? Break below, stops above there. Have this order block validated, right there. Break, entry, stop above. I like this because it keeps the risk lower. But if that's where we want to get into enter confidently, and it's good seeing it in a day like this that these entries work if you know the bias. Anyways, we know the bias is to continue bearishly, at least to this one. Now, I took one partial below this low, and then I took another below this low, and then I took my last in standard deviation of the bank block, which is right at the low of the day, right there. I let a runner run, and I traded 3 micros. Look at that. Is that not beautiful? Yes, it is. That could have been a secondary entry. Um, I'll show you also the strategy of a break of a bank block, where which happened in the London session. So we get this move down here, sweep here, so people go long, right? Take out this trend line, take out this high, take out a bunch of stops all the way down below that one. which is a double bottom with this low, that, and those, is more clean on the 1 minute. And then we break this high. This break of this high validates this as a bank block. If we are bullish, there is no reason at all, no reason for us to sweep this low. What happens? Boom, we sweep this low. Okay, then you say, okay, this is a break of a bank block. We are now bearish. Where are we drawing? Where did the banks enter? I think it was the entire thing was a measurement. Wasn't very clear. Where do we get opportunity for an entry? We get this flag. Where do people put their stops after this breakout? Above. Sweep, that's where the banks enter. Okay, that's where the pros enter. Right, where else could we have entered? Let's drop down into the 15-second one. Do we get a lower time frame order block here? Yep, here if you want a lower time frame, lower risk entry, there. And I mean, it's 0.02% risk. And where would you hold this to? Well, at least I would probably think of this one as standard deviation, which was wrong, but that's where we went. Now, which draw do you pick? Like, okay, we get this break of a bank block. Where are we going to next? I like to think of the next very clear major draw. In this instance, however, this move up here is also what? It's a bank block. We got this move up after we swept this liquidity. So we've already swept the liquidity here. Because of that, it's illogical for us to go and sweep this liquidity, right? Because that's where the banks entered. So in this instance, once we break this low, well, we already have that, like breaking this low tells us, okay, we're pursuing a low even further down. And the next obvious one is the the pre-opening ones of yesterday, right? This low is very clear. And that's what we got. In this instance, our standard deviation was the whole move. I believe, yeah, probably because this was a bit of a flag, fake breakout. Um, but yeah. Okay, I hope this makes sense. And with this, I wanna just end on saying this, I don't think it's the real crash move, okay? Right now, it's engineering a ton of people to go short, right? And where do people have their stops? It's gonna be a beautiful crash later. But we need to engineer a bit more. People have their stops there. They went short there. They went short there, put their stops there. They went short there, put their stops there. Okay, so now we have three highs. Once we get this breakout below here, where the people put their stops, there. Okay, it's very, very clearly engineering stops on buy side, which tells us banks in the long run want to go short. They want to build up so there's enough liquidity for them to go short. The bigger the liquidity build up, the bigger the crash. That's always been the way. Now, we'll have to see how big this inducement move is. The bigger move down, the bigger the bank block, the bigger the standard deviation of the bank block, right? I think this was a very important video that it can really change the game because everything, everything comes down to the bias. And if you don't have the bias, you're done. So, yeah, I hope you enjoyed that. For me, it was a game changer, and I wish you all the best.